Let's have a look at the market outlook for UK stocks for 2023. Let's just see which ones have been performing well over the last 3 months, just to see if that's going to continue forward and if the financials look good. So I'm just looking at London Stock Exchange main market companies. Home 24, it's up 185% in the last 3 months. Cash flow negative, I'm afraid. So that doesn't exactly fill me with joy and confidence. Let me give you a few more and see if any of these are actually profitable as well. That might be helpful to know, and also just have a look at some of their valuations. So what have you got in terms of profitability? Devro, it's up 76%, consumer staples company. I should say the big ones, the financials, which are like Kelso Group, Alchemy Capital Investments, Upland Resources, they're all burning cash. They are also loss-making, I'm afraid, so they don't fill me with confidence. That's your financials. For those thinking financials will be a winning sector, you're really relying on momentum. You're not looking at valuation or cash flow for those. You're really relying on momentum. That's up to you if you want to rely on one factor and not all of them. So I'd rather look at a 360-degree picture. What happens if you drill down a bit more? What if you get down to, say, consumer staples or consumer discretionary, so the consumer sectors? Well, here you do have companies which are making profits, and like I said, Devra is 76% up, and you've got with RM PLC and Card Factory, two companies which are also profitable and have relatively low valuations over there. So it might be consumer staples and consumer discretionaries are the ones which, from given what's happened in the last 3 months, be the ones which will lead us out. Again, few and far between, because you then get things like hostile world, hostels as in the places where you stay. That's up 67% in 3 months, but sorry, burning cash, loss making. So it's not an easy call. It's not an easy call. But in terms of performance, looks like the market's decided it's going to go into financials and consumer staples and consumer discretionary for next year. You'd think where are basic materials? Well, you've got critical metals and Cirrus Mineral Resources, both up over 100% in the last 3 months. But again, loss-making, cash flow burning, so you may not like those. For those wanting momentum, profitability, good valuations, growth, not burning cash, like I said, you're going to get a lot of noise. In other words, ones which are far riskier. So you want to filter out or sift through the ones which are actually profitable. Like I said, RM PLC, Devro PLC are of the few. You've got industrials up 55% in the last 3 months, like Smith's News, which is cash flow generating, profitable, but you might get a few industrials in there, is my point. What I'm saying is a lot of noise is going to be going up, a lot of momentum in those sectors, but you really want to sift out the ones which are also profitable, cash flow generating, rather than just go purely on momentum plays. That was the UK outlook. I'll do a US specific one in a second.